Hey guys, welcome back to the fourth video in our educational series. The topic of today's discussion is going to be around the speculative opportunity for Litecoin here and now. In our last video, we laid out why Litecoin is the second Bitcoin chain emerging, even though that narrative doesn't exist yet. But before we get into today's video, I do think it's important to recap everything that we've discussed thus far in the prior three videos. I think the context is important because without it, you're not really going to understand the logic described, the reasons why we come to the conclusion at the end of this video. So in the previous video, we discussed Bitcoin's true value proposition, that it's not just number go up, it's not about supply side metrics, but really what's going to drive demand for Bitcoin long term is the demand for censorship resistant, trustless settlement. So demand for permissionless money. We then discussed how a market for block space naturally develops since block space is limited to preserve Bitcoin's decentralization. Naturally, you get this fee market where the cost of using Bitcoin rises with demand. Now, most people still believe that centralized scaling is the solution to this problem, but we pointed out that when Bitcoin inevitably becomes a threat to the state's monetary monopoly if people actually adopt it, that those centralized services are easily shut down. So it led us to the conclusion that Bitcoin can't scale this way. Instead, it will scale horizontally through multiple implementations of the same technology, not vertically. So substitution is the only natural market viable path to increase the availability of censorship-resistant money to more people. And to contextualize that, we went through the historical growth of the market around Bitcoin and Litecoin over the last 14 years. And so again, if you haven't watched that video, please do so because it does provide the context you need to understand the logic here. We really concluded that Litecoin has been in this negative reflexive feedback loop where sort of lackluster price action leads to capitulation. And contrasted to Bitcoin, it's been in the exact opposite dynamic where it's been in a positive reflexive feedback loop of price going up, which forms a strong narrative and leads to higher prices, and that process just keeps compounding. So they're exactly the inverse because Litecoin has increased dramatically in monetization over the last 7-8 years, but price hasn't gone up, and Bitcoin has lost dominance on the monetary side that drives price long term significantly to Litecoin, but price has exploded. We discussed also the monetary consolidation principle that drove Bitcoin's early network effects. That's the idea that markets naturally converge toward the dominant money, but the unique thing about Bitcoin is that it costs more the more people that demand it, and so naturally you get this substitution effect. But the real important point I wanted to make in that previous video and now today for context is that the same consolidation is now happening around LTC. That's why you see it dramatically outperforming on these payment processors. That's why you see 10x lead in Litecoin transactions, active users above all of the competition that compete within the same market sector for money. So we'll shift gears now after providing that context and discuss speculation specifically. We'll focus on two key areas for this video. The first is going to be sentiment and psychology, and then the second will be technical analysis. So let's dive into psychology and sentiment and why it matters. So markets, especially the cryptocurrency markets, don't always move on fundamentals. They move on stories, right? Today we're in this, what I would call end stage of a longer term credit cycle, where primarily what's been driving asset prices, especially Bitcoin, has been inflation, right? It's led to popularity contests. This is similar to people running for election, campaigning for elections, right? You see all these people arguing online about what the better coin is, and the better marketing you have, the better chance you have of your coin price going up. And that's why technical analysis has dominated the crypto market, because there's limited value really being demanded or delivered to the end user for most of these cryptocurrency networks, so sentiment drives prices. And that's most easily analyzed through technical analysis. So we see this dominance of technical analysts on Twitter, on X, on financial media within the cryptocurrency space. And it makes sense. But the point I want to make is that eventually fundamentals are the only variable that drive price. You need users that demand your actual good or service to survive, and you need increasing demand and need to understand why people will demand your cryptocurrency in the future to have any chance at success. So sentiment often lags reality. Narratives are lagging indicators. And the point I want to make is that fundamentals improve long before narratives start to change. And the greatest opportunities arise when sentiment or consensus is wrong. We've seen that in 2008, and I think we're going to see it in the cryptocurrency markets. It's where investors don't have any hope in an asset, but you as an individual understand why that asset will see growth in the future. Because once consumers actually demand the product or asset or cryptocurrency in this case to a greater extent, then eventually the rest of the speculative market will change their opinion and drive it to a premium. So the larger the divergence between general consensus, expectations, and reality, the larger the opportunity. And that's exactly where I see Litecoin today. Now let's go through the sentiment around Bitcoin and the reality versus the sentiment and reality around Litecoin. So today the sentiment around Bitcoin is that it's the greatest money in the world. I think that's the dominant narrative that most people believe, that infinity over 21 million type slogan, that it's going to be the digital gold and increase by 50% or 100% year over year in perpetuity. The reality is that it's trading at its highest speculative premium above its monetary adoption in history. And the only way it can increase price is through increasing a dramatic increase in speculation from here. As price goes up, it takes more and more capital to push price higher, and if you don't have fundamental demand for the end product, then eventually it leads to collapse. Now let's compare it to the sentiment around Litecoin. Litecoin's sentiment from a broad perspective, not the Litecoin community, is that it's useless, that it's a copy chain, and why wouldn't you just use BTC? The reality, and it should be obvious, but we'll state it again, is that Litecoin is the way that Bitcoin's value prop is actually scaling. So it has about 60% of Bitcoin's daily users, although these are mostly low-value transactions. The higher level economic idea we've discussed in prior videos leads us to the conclusion that this process will accelerate into mid and high value ranges if demand for permissionless money increases. And that will lead to speculation around the second Bitcoin chain. So now let's get into the second section here. It'll be on substitution economics, and we'll try to model this a little bit. The first chart that I have here is important to understand because when we're thinking about demand for money, we need to think about, where the transaction value ranges lie in an economy, and it helps us visualize what's actually going on. So the way I think about this in my head is that transactions in an economy kind of follow this bell curve where the vast majority of the total economic volume transacted in an economy sits somewhere in the mid-value range from $100 to $20,000. Litecoin currently operates in the low value range, as shown in the previous video, with median transaction values of around $200, where Bitcoin currently operates in the mid to high value range. Most of the high value transactions for Bitcoin are speculative. They're just coins being traded, to and from exchanges. And most of the real payments for goods and services happening on Bitcoin, as you can see on these payment processors and from the network data itself, is somewhere between $1 in $10,000, $1 in $20,000. The second graph here that I'll pull up, this is a way that I like to visualize how this substitution process is happening. So like we pointed out before, but I'll reiterate, it's really tough for a substitute Bitcoin chain or substitute money to get off the ground, especially when it's being monetized at low value ranges. But there's two key points here that I want to make that can change that. The first is that Bitcoin fee levels don't increase linearly with demand. And what I mean by that is as demand for block space increases, the fee level can increase much faster. So Bitcoin fees typically rise exponentially with linear increases in demand for block space. That also means that transaction migration increases exponentially with increases in demand for block space. Actually, it's almost like an exponential on an exponential, because as we just showed in the previous graph, there's a higher percentage of transactions in the economy for each linear increase in the value range. So as fees increase, let's say from $100 to $110 to $120, you get this exponential migration in total value to LTC. So that's what this chart is trying to depict, that basically we've been seeing monetization at the low value ranges, but if fees do increase, and they can increase vertically, we can see this vertical rise in substitution and eventually price action for Litecoin. So now let's get into what will catalyze this narrative change. And really it's going to be higher Bitcoin fee levels. Narratives die from catalysts, but they tend to persist until something breaks the false belief. We've seen it in the financial crisis in 2008, where nobody saw it until that belief that it wasn't a bubble died overnight. And Bitcoin's monetization limit, if you understand it, will eventually be revealed if demand for block space is high enough. Let's go through the history of this to kind of put it in perspective here. So this is a historical chart of Bitcoin fee levels. As you can see, since 2017, they've been elevated, and they've kind of been in this range from a few bucks to $50. But my expectation is that they'll break to new highs, and we'll get into that here in a second. So let's identify the sources of block space demand, because that's important to trying to assess probability and how high the fee level will go. So what's new to 2024, 2025, or this current speculative bull market, is that we have runes or ordinals that now are live on Bitcoin. These are like high beta meme coins, and they haven't seen a ton of volume yet, but a portion of the reason Bitcoin fees rallied last year was because of that minting of runes and ordinals. So it's just a new source of block space demand that can accelerate the demand for block space. The second here, we have estimates of roughly 100 to 150 million Bitcoin holders, and I'll show a chart later that actually depicts higher than that. But in a mania, it's likely that this can increase at least 2x. If we see the typical blow off top where everyone's talking about Bitcoin and cryptocurrency. The third point on here is that long-term holders are at higher levels than any other point in history. And what's important here is that long-term holders, a lot of them haven't consolidated their UTXO set, meaning they will be spending from multiple outputs. And that will lead to further congestion on the chain because it takes up more data in a block. And so you can't get as many transactions through the chain. And then the last point is that we now have this macroeconomic situation where the narrative can be one of fear that drives Bitcoin to higher prices. People like Ray Dalio have discussed this, and if that develops into the mass psyche, that'll also increase demand for physical delivery of Bitcoin or self-custody, which dramatically would increase the demand for block space. So let's get into a couple of charts here. This is from Plasbit. It shows global adoption stats of Bitcoin, or at least speculative adoption stats. It is pretty insane on this next chart. If you look at it, it shows the countries and how many people have ownership within each country have exposure to BTC. Right now, it's estimated at 229 million people. And we know that the max Bitcoin daily users with normal transactions going through the chain is roughly 400,000. So that's potentially like 0.2%. Or if Bitcoin holders double from here, speculative adoption doubles, only 0.1% of the people that own it can use the chain a day. So you can kind of imagine if 5% of people try to make a Bitcoin transaction or take possession of their coins, how that would result in a vertical rise in the cost of block space or the cost of transacting. Now there is a counter argument that I wanted to make people aware of, and what's kind of prevented fees from rallying so far this cycle is that most of the price growth has been driven by these large custodians, so ETFs, large corporate buyers, institutional buyers, have been driving price, and that's leading to less transaction activity. And then also we have batching of transactions at large centralized exchanges, so they can batch a ton of transactions into one to fulfill withdrawal requests. But I think on balance, if you think about both sides, the potential demand for block space right now, I think is multiples higher than any time in history, especially if we get a blow off top that we didn't see in 2021. So now that we've identified this opportunity and looked at some of the reasons why fee pressure is likely to rise and really understand the exponential increase in migration that is possible, people always ask, when moon? So we'll look at technical analysis to understand potentially timing and also supply side liquidity here. So what I want you to take note of here, even if you're not familiar with technical analysis, is that Litecoin's really been in this 8-year volatility compression phase. It's kind of analogous to Bitcoin's pre-2020 run-up, but it's much longer. And generally, the longer something goes sideways, the more explosive or violent the reaction out of that range will be. On the 3-month time frame, we have the highest or tightest Bollinger Band compression in Litecoin's entire history, and we know that network activities is at all-time highs, with a potential and honestly likely expected future scenario of the highest increase in total volume settled on Litecoin, so the highest total migration from BTC. Now if we look at some technical indicators here, we have on-balance volume and CMF shown on the chart. Basically, we have rising volume indicators while price is going sideways. This is indicative often of accumulation, meaning buyers are stepping in at low prices, absorbing that supply, and eventually you'll see a breakout. The on-chain indicators paint the same picture. So Litecoin miner reserves is one of the most interesting charts on a relative basis against all other proof-of-work cryptocurrency assets, because they're at lower levels as a percent of the total supply than anything else, and it's by a wide margin. Litecoin miners own like 1.5–2% of the circulating supply, whereas with Bitcoin, it's 5–10x higher than that. It's roughly 11–12%. So this also helps us explain why the price has performed so poorly, but then also explains to us the supply side restriction here. And then if we look at Litecoin long-term holder balances, they're at all-time highs, especially if we adjust for exchanges moving coins between wallets. Binance moved 2 million coins just to themselves, and that resulted in that decrease you see recently. So from the technical and the on-chain indicators, this looks like accumulation, supply absorption, and then we have this structural demand catalyst, this fundamental demand catalyst, which would lead to a violent breakout type scenario. And now this final chart here, it's from Tony the Bull CMT on X. Hope he doesn't mind me using his chart. He's been a guest on my live stream before, and I do like his technical analysis. What he's showing here is that Litecoin is setting up for a move out of this long-term range. He's comparing the breakout in early 2017 on the stochastic RSI to right now. I think, honestly, this will be far more explosive than 2017, as Litecoin rallied solely on speculation back 8 years ago, and it didn't have the same type of fundamental demand catalyst that it does today. So really when we're talking about modeling the repricing, we want to take into context all these variables. And so to review here, Bitcoin trades at an extreme speculative premium based on false narratives. It's at a record network value to transaction ratio. Litecoin trades at a record low NVT, especially if you adjust for the real economic volume, because Litecoin's lost speculative volume but gained real monetary adoption. So it's sort of the inverse of BTC. I think the potential shift is massive. You could see 10 to 50% of Bitcoin's real monetary market share be absorbed by Litecoin via substitution. The Litecoin float is way tighter, exchange supply is way thinner, and it takes far less money to move Litecoin. So positive reflexivity likely will kick in at some point where price goes up, attention goes up, demand side liquidity goes up into this thin ask side liquidity. And then eventually institutions follow retail just like they followed them with Bitcoin, and the narrative shifts. So we have potential ETF approval, which is a speculative catalyst that opens up larger pools of capital to speculate on LTC, and they will chase performance. So really to conclude this video, this opportunity is the definition of asymmetry. It's really an asymmetric trade setup. Because Litecoin's fundamentals are strong, adoption is real, and it has this potential orders of magnitude increase in real monetary demand. The market sentiment is still basically blind to this, but the fundamental truth is happening and has the potential to happen at a much larger scale. When Bitcoin fees rise rapidly, Litecoin will absorb demand exponentially, even vertically, leading to narrative change and Litecoin stealing a significant portion of Bitcoin's speculative premium. So the speculative repricing potential is high. It will be reflexive, sharp, and sudden, and this would lead to institutions chasing as they wonder why they only own BTC. And to conclude this, I really want to stress that what's important here is that this type of setup has never existed before, never in crypto market history. It's sort of a market anomaly. What I'm trying to say is that Litecoin can go through the same process Bitcoin went through over the last 8 years, but within a few months. We've never had a catalyst in crypto where fundamental demand can increase orders of magnitude in a very short time. So it's really if the fee levels, if this congestion mania I'm talking about transpire, this is an extremely likely scenario. The upside price targets can be really silly and ridiculous, and if I said them, people wouldn't even believe me. But thanks so much, guys. I hope that explains sort of why sentiment and narratives are so important, identifying the divergence between consensus and reality, and then looking at all the available data we have to try and predict what's going to happen into the future. But thanks for tuning into this video. Follow me on X at WLitecoin or subscribe to the YouTube at the Litecoin Forecast. And then I have this book titled Why Everyone's Wrong About Bitcoin that will be coming out soon as it's done and gone through the editing process. The next topic we'll explore is on the macroeconomic situation we're currently living in and why this will drive demand for permissionless money far into the future. That's really important. This is the most important topic to cover because this is what ultimately will drive demand for Bitcoin chains long term. And I think without understanding that, there would be limited reason for me to be involved in the space if I didn't. So tune into that video. Thanks for watching, and I'll see you there.